Well, good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. For those of you new to the room this morning, welcome. I'm going to give you a real quick overview of what you're looking at here. This is the diversified trading system, and it's diversified because it looks at the market from 3 different points of view. Here in the top left, we have the Hawk Micro Scalper. The top right is the Falcon Swing Trader. The bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. Now, the Raptor is the latest addition to the DTS family, and it actually incorporates elements of the other 3 birds all into one tool. What you're going to find with the DTS system is that all the signals develop more or less the same way. What happens is we're going to get a warning dot and an audio alert when the signal parameters are first being met, and then when all the signal parameters are met, we get a triangle and a hash mark. And that tells us that it's time to make a decision about the trade. Now, not all these signals are created equal. You're going to notice there's some here with yellow bars. We don't take a yellow bar signal on the Hawk because the yellow bar indicates neutrality. And you can see how we're kind of seeing a market that's in a little bit of a sideways mode out of the gate. So we're going to give them a few minutes here for the dust to settle. The market that I'm looking at right here is the NASDAQ. But I'm also following gold and crude oil. However, I would be happy to take a look at any market which is of interest to you. Let's take a look at where the market left off and what's kind of been going on in the overnight. We'll use the Eagle Trend Trader here. The Eagle has this band on it. No, it's not an Ichimoku cloud. I know it looks like one, but honestly it's not. But the band does give us our directional bias, and you can see that from the London Open, it's pretty much been in rally mode for most of the European session, and then things started to fall apart about an hour before this morning's open. So we've got a rather substantial looking opening gap above the market. So prices opened up right up here, closed way down here. This is going to look like a pretty big gap to fill, and we'll see whether or not they try to get in there. We're currently producing a green bar sell signal here on the Eagle Trend Trader, but the market is a little bit range bound, so we've produced the signal. Now everything is in sync. I'm going to show you how this works. I would prefer to take it below this low here, but you know what? We're going to set this up. We can take this on what I refer to as a second push on the entry. In other words, the signal has printed, and now we're going to look for the renewed momentum to bring us into the trade. Now this tool that I'm using here on the right to set up the trade, this is called the Trade Manager. This is a fantastic tool because what this does is it automatically limits my risk to a certain percentage of my trading capital. All right, and the Trade Manager also comes with all these stop strategies. There's 16 different stop strategies that we can use, and each one is fully customizable. Currently, I'm going to go with the ATR strategy, and I'm going to let you see how it automatically pulls my stops. I'm going to delete the break even here so you can see how it rolls my stops down. I had an auto break even trigger there, but these blue dots here, these represent where the stop strategy would be. And you can see how it picked up my stops and automatically rolled it down as the market continued lower to our profit objective. So a nice little start to the day. They do have a lot of room to get into that opening gap though, so I should have maybe tried to run that one out a little bit. Let's take a look here at the Raptor. The Raptor has a slightly different tool here. This is called the Trailblazer, and the difference between the Trailblazer and the Trade Manager is that the Trailblazer does not have that risk management component to it. What the Trailblazer is more of a one-click entry system. So you set up your trade parameters the way you want. So currently I've got one contract going for 20 tick target, and then the other contract which is open. You can see I have a 0 tick target, so 2 contracts. And if I hit the buy or sell market buttons, I'm automatically going to get my profit target, my stop strategy, everything. So I'll show you this here in a moment. Let's see if we get a sell signal. Market's hopping around a little bit. We could end up with a reversal here, but hey, it's a demo room, right? I can show you this sort of stuff. So what I'm waiting for is I'm waiting for the triangle. There's the signal. So you see, just by hitting the sell market button, I've got everything in play. I've got my stops, I've got my profit objective, and what I'm going to do is I'm going to roll my stop here a little bit, take it back to the hard edge, give this trade a little bit of a chance to work out. And as this trade continues, if we can break through these lows, there we go, we're producing another signal. You're going to see once again that the trade manager is going to start rolling my stops. If we catch a little bit of a runner here, I'm going to switch my stop strategies. And while we're waiting for that to happen, this here is the Geiger counter. This is an add-on tool, which means you can use it on any chart. Doesn't have to be a DTS chart. It can be a 5-minute chart or a tick chart or whatever it is that you happen to be trading. But what it is, it's a tape reader. It shows you the time and sales. You can see who is in control of the market. What I'm watching right now is this dial. What I really want to see is I want to see this dial pull over here and hold and hold and hold. That's going to show me that the sellers are chewing through the sell orders. Right now it's fairly evenly balanced. Let's see what happens when they try to break the low here. Come on, somebody get on the other side there. Come on, get somebody take 39.73. All right, well, what I'm going to do is I'm going to change my stop parameters again here. Perhaps bring them in a little bit tighter above this high. Because if it fails here, it's probably going to reverse and head higher. Come on. Somebody get on the other side of 39.74. Come on. Boy, oh boy, the buyers really dug in there. Nope, looks like they're going to try to push the market higher. But you get the idea. It's just a one-click entry system where it's very easy to get into the trade. There's not as much to set up. Now, I can also enter a trade manually by right-clicking on the chart and placing an order, right? So if I wanted to do that, I could have done that as well. But we'll see here. Now we're at the top end of the range, and the sellers are trying to lay it on. Oh, this is a very, very tough little range that we've got going on. So just watching the Geiger counter here. Come on, chew through those orders. No, it's too even. I really want to see that dial pull here. There we go. Oh, come on. There we go. Oh, the buyers are fighting it back. What I'm looking for is I'm looking for it to pull over hard and hold and hold and hold. And that shows me that the sellers are really in control, which right now does not seem to be the case. So I think we're going to see a little bit of a run up here. And they're probably going to try to retreat into the hard edge. So this trade's probably going to end up failing. Now, again, this is a demo room. When we're this close to the low, we would probably try to enter below the low here, but at least you get to see how the software is working. they go. They're going to stop me out here in a sec. All right. And I suspect we're going to see a little bit of an uptick here now. And there they go. Nice little first micro macro cross while all that was going on. That's one of our high probability signals here on the Hawk. It occurs when the micro line crosses over the macro line, and it's the first signal where everything is in sync. So we've got green bars, green trend lines, green filter, very high probability signal. You can see there's one there. There's another one right here. You know, if you're just looking for a high probability signal that you can take time and again, that is definitely it. They got into sync right here. This one gave you a little bit of heat and then came back, and you actually had another one. You had two first micro macro cross signals. Actually, you could even count this one as a first micro macro cross. All right, so we'll put those away for now. Okay, now we're into a macro pullback here on the Hawk, and now we're back into yellow bars, so that's kind of throwing the nix on the rally, or the attempted rally. Let's get my Geiger counter back here. While we're waiting for things to shape up, here is the Falcon Swing Trader. The Falcon Swing Trader, we pay very close attention to the trend line color. When the trend line is green, we're looking for buying opportunities. When it's red, we're looking for selling opportunities. One of our high probability signals here is what we refer to as the trend change signal, which is essentially the first signal which is all in sync when the trend line changes color. So you can see we've got a trend change signal right here a few minutes after this morning's open, and that had pretty good follow through to it. This is what we refer to as a late filter entry signal right here, and this should have worked. Well, actually it didn't even trip, so it didn't get low enough to engage. The late filter entry signal is a high probability signal here on the Falcon. It occurs when the filter goes out of sync, comes back into sync, but the trend line never changes color. So here we had a little trend change to the upside. You can see the trend line went from red to green. We have this little up portion, down portion, up portion. There's our signal. Everything is in sync. Nice little rally right to the resistance line. These lines that you see on here, these are also an add-on, which means they can be used on any chart. This is the ultimate support and resistance suite. It's an assortment of 21 support and resistance lines. No, they are not pivot points, and no, they are not Fibonacci retracements. They're much better than those. These are going to forecast where the market's likely to find resistance and support today. The gold line is your median line, and then we've got primary resistance above, primary support below. These three lines tend to be your strongest. And once you get outside of here, then you're into the secondary resistance lines. And you can see right now, it looks as though the market's pretty well caught between the two resistance lines currently above there. If we break here, if we break down here, we'll probably see the market move at least two zones, which means we could see it move down here to 39.26, which would be an incredible move. All right, we'll put that on the shelf. Things a little bit quiet here at the moment. Unlike yesterday where it was just get the trades on as fast as you can. those of you following crude oil, here's crude oil on the Eagle. And you can see, let's see, where did crude oil open? Well, crude oil opened right here, came back with a with trend signal right out of the open. A little bit of a move lower there. I think that's enough to find our profit objective. Yes. Just hit our high probability profit target, and now we're starting to struggle a little bit. And you're going to see that happens a lot, where the market hits the high probability target and then starts to, well, maybe not full out reverse, but wander, which is why we have our high probability targets. Okay, the NASDAQ back into yellow bars. Things a little bit disorganized here this morning. And I think it's partly due to Tuesday's session, where we had a very strong trend. It's not unusual to see a market alternate between trending days and chopping days, especially nowadays. Well, we'll see if we can't get some sort of decent signal here. If not, I'll throw a signal on just so I can demonstrate how things work for you. Well, actually, here's a first micro macro cross. It's still a little early. We did get a little bit of a test of the lows. What I'm going to do is I'm going to take it above the high, and I'm going to risk it right there. Oops, and it kind of ran away on me a little bit while I was showing you that. But a nice little uptick. You see, what we want to see before the market reverses is this, what I refer to as a test of the extreme. Other traders call it other things. This is how I was told about it. And what we're looking for is we're looking for a retest of the lows, right? A retest of the lows and the failure. That's kind of the tip off that this first micro macro cross is going to work out for us. And in fact, we're having a little bit of follow through here today. So maybe what I'm going to do is I'm going to change the parameters on my trade manager. And instead of going all in, all out, I'm going to take half my profit on target. I'm going to leave the other half in as a runner. So you can set as many as 3 targets for your trades. And currently it's starting to look to me like we're in a little bit of a sideways chop. You see, when the eagle looks this organized, you've got your filter all breaking up. We've got no real trend here. It's starting to look very much like that, like we're stuck. Okay, so here we are at the top end now of this trading range. It's not usually wise to buy the top end of a range. People always ask me, Eric, how do you handle a choppy market? Well, the best thing to do is to let it break out. And then when it breaks out, it's going to retest here somewhere. And you're going to see whether or not the buyers truly have control of the marketplace. If they do, it will come back with a buy signal. If not, it's going to continue into this trading range once more. And you'll know to avoid it. So there's a little something you can take with you. So big rally up for the last 15 minutes or so. And we're currently trading, like I said, at the top end of this range that the market has established. now they're starting to struggle a little bit. So it's starting to look like that range is holding a little bit. We are getting a macro pullback signal here in the hawk, and this is also one of our high probability signals, and it's coming back with a 4-arrow consolidation, which we know is a high probability trade. I should probably just throw a onesie in on this one, but we'll see. See, the nice thing about the trade manager is that my risk amount stays the same regardless of where I place my stops, which means I don't have to strangle the trade with an overly tight stop. All right, so what you saw there is we've hit the break-even trigger. The trade automatically rolled up to break-even, and it looks like we might have a little bit of a runner going on here. I'm going to switch to the parabolic strategy, which I like to use when the market's a little bit more aggressive like this. And we'll see if we can't ride out this swing that we're seeing. So see how the trade manager is rolling my stops with the blue dots. Come on, get up there. Get up there. Take out that little swing high and we could see a little bit of a run. There we go. So parabolics, of course, a little conservative at the start of the trend. They tend to get more aggressive as the trend seems to slow, which is why they're nice ones to use for a situation like this. If you want something even more aggressive, we have the bar high-low strategy, which is ultra aggressive. It takes you out at the first sign of weakness. Then there's more conservative strategies like the chandelier, or you can even just set a fixed number of ticks that you like. Like I said, there's 16 different stop strategies, something to suit every market condition and every trader's personality, really. So far, the parabolics are doing a fantastic job of keeping us in this market. We hit our first profit target, and the second contract is a runner. Remember, I split it up, so I was 50-50. And there we go. So we've got stopped on a little bit of a reversal there. Still a good signal. This 4-arrow consolidation is one of our high probability signals that we look for. And while we're waiting for the next, I'm going to show you what that looks like. So we have what we call a cheat sheet. And these are the high probability trades that we concentrate on. So with the hawk, we have the first micro-macro cross, which is our strongest signal, the macro pullback, the 4-arrow consolidation, which is what you just saw, the post 4-arrow consolidation, and then the red bar buy or green bar sell, which usually occur near the end of a trend. So that's what we're going to be on the lookout for next. And then we also have a cheat sheet for the Falcon, where we look for, these are the basic signals that we're interested in. So we have our trend change signal, we have the late filter entry signal, and then we have the basic trend line touch signal. So even though it may look a little bit overwhelming right now, it's really quite simple. There's only a few things that we're really concentrating on finding. And it looks as though the buyers are making a serious push higher now. So, oh, here's a better late filter entry signal. See here, this is the late filter entry signal on the Falcon. The filter goes out of sync and then comes back into sync. The trend line never changes color. And you can see that had very good follow through. Had we taken the trade like that, no problem hitting our high probability target. And in fact, you probably could have had a runner in on this one as well. So we kind of suspected the buyers might be a little bit more aggressive today, given yesterday's bear session. Well, actually, it was an odd session, wasn't it? The market went higher, it went lower, or sorry, it went lower, went higher, went lower. There were some major swings in there. And then it finished the day fairly neutral, which is a pretty good indication that the market is quite balanced and it's probably going to end up tipping the other way. So we've got crude inventory in about a half an hour's time. And then we'll take a look at the crude oil market. If there's any requests or any questions, feel free to ask. Here on the Raptor, it's a little early, but we may be seeing what we call a soft edge sell. Ah, Norm asks, does this work on the Forex market? Yes, it does. Actually, it'll work on any chart that you can plot on NinjaTrader. Mike Filigera uses it to trade the stock market. Omar El Tuki uses it to trade the Forex market. Omar and Mike have their own websites, but they use the DTS system to trade their signals. What I can do is I'll put I don't have the currency pairs, but I do have the futures equivalent, so I'm going to load the 6E here in a moment. Nylish is asking, what is the shaded area on the Raptor? The Raptor is a combination, pardon me, the Raptor is a combination of the other three trading tools, all merged into one bird. So this shaded area here, this band, is borrowed from the Eagle Trend Trader, and it gives us our directional bias. What we've done with the Raptor is one of the Raptor owners said, hey, I'm getting really good results using a double band. So that's what we've done there, is we've incorporated a double band on the Raptor. And what we're looking for, not only does it give us our directional bias, but it also alerts us to hard edge bounces. Whenever the market encounters the hard edge, we always anticipate some sort of reaction. And usually it's going to be a with trend reaction. And we're also interested in these cloud crossovers. So I'm trying to find you an example, but here's a nice cloud crossover with a hard edge bounce. So the clouds cross over. Technically now the trend has gone from bullish to bearish. The market encounters the hard edge, comes out, produces a signal, and there you go. Nice little follow through there. When the market's like this, it's all sideways, right? Our filter is out of sync. A lot of yellow bars through here. The filter is waffling back and forth. Again, this is just a choppy market, and it's best avoided. Sometimes the hardest thing about trading a choppy market is identifying that you're in a choppy market. Bayard's asking, how do I turn the audio alerts on and off while listening to your webinar? That's going to be on my end here. If you find it too distracting, I can turn them off. Norm is asking, if I'm correct, these are modified wrinkle bars. What does the width of the bars signify? Yes, they're the mean wrinkle bars from Indicator Warehouse. Great bars, terrible name. I really wish they had thought of a better name for them. But the mean Renko bars, they are a modified Renko bar, as you pointed out. So it incorporates the benefits of a range style Renko bar along with the sensitivity of a candlestick bar. That's what makes these different. What I really like about these bars is um, that they plainly show you the price action. They show you quite plainly who is in control of the market. I showed you guys a little bit, and girls, a little bit earlier, this whole concept of the test of the extreme. Once we see, the market fail, then I know very well that the sellers have control. Where the buyers had control here, sellers put a stop to them, pushed it down, buyers came back, sellers came back early, and here we are, we're generating a sell signal. That's a signal that I can take with a great deal of confidence because I can see the price swings, right? I can see the sellers take control away from the buyers. Now, this is also an add-on. It's not specific to the DTS system, but it is the chart style of preference with DTS. You can trade tick charts or time-based charts with DTS if you prefer. The width of the bars is also an add-on. It's the dynamic equivolume bars from Indicator Warehouse. And what these do is they show you volume relative to that bar. Dynamic equivolume bars were developed by a trader by the name of Dick Arms. He's also the guy who's responsible for the Trin, for those of you guys who like to watch indicators, like Trin and Tricks and all that kind of stuff. And what he wanted was an easy way to incorporate volume into his charting. And it's actually genius. He decided that, if there's a lot of volume on a bar, he's going to have it paint wider than if there's less volume. And what's interesting is that a lot of people think, when the market is trending, there's a lot of volume with it. No. You can tell when the market is trending because the bars are actually very narrow. When the bars get thick, then there's a lot of struggle going on at that particular price point. Now, I know one of the DTS owners, he likes to highlight these areas where the bars are especially wide because he knows that's going to be a significant area of support or resistance. So it's going to be an easy way for you to plot support and resistance areas as well. You can see this one came right near our support and resistance line anyway. But it's something to bear in mind. If you're watching your charts and all of a sudden, let me get rid of a few of these. All of a sudden, the bars start to get wider in width. That tells you that you may be looking at a turning point. So you see we had a lot of seller participation right here. The buyers fought it back, brought it down a little bit. Here come the buyers again. Now I'd be looking to see these bars get nice and thick. If that happens, we're almost certain that we're going to see the sellers step in here and push the market down, at least for a little bit. Okay, so we got a little bit of a late filter entry signal here. I wouldn't necessarily take it on the hash mark. The hash mark is a suggested entry. This is the type of signal I would probably take on a breakout above the high. I don't think I'd want to take this one right at the hash mark because, hey, we're kind of going sideways here. But the trend is up. And it's still a little early, but a breakout higher could see the market continue. All right, working on a possible trend change here. We've got a few minutes to let these guys play this out. Let's see what's going on with the other tools. Oh, look at that spike in buying and selling that was going on here on the Geiger counter. So big blowout on the buy side. Sellers absorbed most of it, which could end up sending the market a little bit lower here, but we'll see. Watching the dial. So again, what I want to see is I want to see it pull over and hold when it's very neutral like this. Oh, there we go. See how the buyers pulled it over and they're holding and holding and holding? That's to be expected as we're getting toward the bottom end of the trading range here. And now we'll see whether the sellers can do the same, pull it over and hold and hold and hold. That may end up with a breakout. So the Geiger counter was actually developed because one of the DTS owners said, can you give me a way to gauge whether or not I should stay in a trade? So what he was looking at was, you know, had he, let's say, taken the cloud crossover signal, which originated right here, and he's in this beautiful trade, how does he know when it's time to get out? Well, that's where the Geiger counter came in, because you could see the order flow. See, right now our needle is red, so the market's very bearish. And we're getting a lot more activity here on the sell side. You see the buyers not really able to absorb it. And the market ends up moving lower. So what he did is he would use this as a way to gauge, okay, it's time to go. You know, the market's getting a little bit weaker, time for me to get out of the trade. But it also evolved from that into a tool that you can use for gauging your entry signals via this dial. Like I said, if you watch the dial, you get a pretty good indication of who is in control of the market, the buyers or the sellers. So here we are, we're into the hard edge now. And as I said, we usually anticipate some sort of reaction off of the hard edge. That was a very nice soft edge sell, by the way. This is one of our high probability signals in the Raptor, where it's actually a counter trend signal, and we expect the market to move into the hard edge. So here we are, we're continuing to hammer against the hard edge. And we'll see what sort of reaction we get out of that. Hopefully they'll give us a clean signal that we can look at buying into that. We can obviously nix the buy signal there. And while we were looking at the Raptor, hey, there's another first micro macro cross signal. Right there's that high probability signal that we look for on the Hawk scalper, and nice follow through from that. Okay, we're kind of setting up some ranges now. Fully expect the buyers to show up here one more time. Give us that test of the extreme. Right, we're looking for a little bit of a bounce here. We're looking for a retest of the highs. Before the sellers can take control, 99.99% of the time, they will give us a retest of the highs. And then, well, if they can't hold on to the trend, then it's going to fall apart and we're going to see the market head lower. So this is technically a red bar buy signal. It occurs from the hard edge of the eagle. This is one of our high probability signals. And a lot of times I'll let the ATR turn it over, but when I'm looking for a retest of the high, I'll be more inclined to take it a little bit earlier. So we'll see whether or not they can get up there. If they can break the high, then we should see the market continue higher still, and we should generate another signal. Let's see what else we got going on here. Oh, we are getting a first micro macro cross here on the Hawk. Notice everything is in sync. I'm going to throw the signal in really quick. Oh, they slipped us a tick on that one. Come on, let's go. Get up there. There we go. So the market's moving in my favor now. So what I'm going to do is, oh, maybe not. Maybe I'll hold my stop just a little bit longer. I wanted to take an on the hash mark. Nice thing about the first micro macro cross signal is it's a high probability trade. It is a scalp signal though, so I usually want to get in it a little bit early. All right, we've hit our, oh darn, hit our break even trigger and just took a real quick look back. I used the break even because I'm of the opinion if the market gets 80% of the way to my target and fails, then I probably won out of the trade. But my problem was I entered the signal a little bit late. So you see, had I entered it on time, I actually would have hit my profit objective. But that's all right. Break even is still a win in my book. Nihilish is asking, so really you do not use the signals or the indicators very much, right? Well, there's certain things that we look for. So for instance, here on the hawk, I'm looking for the first micro macro cross. See, like here the market's in a total mess again. If it comes out here to the upside with the first micro macro cross, which what it's trying to do, then I'm going to look at buying that on a move higher. And actually I should cover that trade a little bit lower. But whatever, we'll let it go. So I'm getting the warning dot. I've got the triangle hash mark. We're looking for the market to rally. And what I should do is I should hold my stop a little deeper. Usually in trades like this, I like to place my stop well below the low because of this whole concept of the test of the extreme. Now we're into yellow bars, which is bad news. And there they go. There go the buyers. Come on, get up there. All right, so the buyers have recommitted to the trend, so I need to get more aggressive with my stops also. I'm going to start rolling them up here, perhaps use the parabolic again. Sure, let's go with the parabolics. All right, so a little bit of a reversal. It just came up shy of my target. It's to be expected, when we're printing all these yellow bars. But my risk was less than what my initial risk exposure was. So my stop out was a controlled stop out, if you will. But no, I don't take every single signal, if that's what you're asking. So you see there's yellow bar signals that are producing here. I don't take those. Because yellow bar signals are unpredictable. This was a high probability signal, this 4-arrow consolidation that we took. I don't necessarily take this signal because it doesn't, even though it worked out, it doesn't fall into the parameters of our high probability signals. Here was another 4-arrow consolidation and a macro pullback. So again, a high probability trade. First micro macro cross, high probability trade. So there's only certain setups that we're really interested in. You could take all the signals if you wanted, but if you're just looking for the highest probability signals, then those are the ones we're going to hold out for. Okay, it looks like the sellers are going to maybe Give this a poke now. I can get rid of this here. So obviously very sideways here at the moment. That should be pretty plain to you. And when the market's sideways like this, the best thing to do is just let it break out and then let it prove to you that it can stay out. So let it break out, let it retest, and then look for that signal. And same thing to the upside. Let it get out, let it retest, and then look for that signal. Because most breakouts fail. You know, it's like 75 or 80% of breakouts fail on their first attempt. That's why we try not to, sell at the bottom end of a trading range or buy at the top end. Yeah, pretty messy right now. Yeah, like Jim says, look at those hash marks. I've never seen 4 in a row. I don't think I have either, Jim. They're all triggering at the top end of the range and the bottom end of the range, which is not what we want. All right, so there they've broken now through the top end. Let's see if they can stay out. Nylish is asking, what's the point of the filters? The filters are, in most cases, they're momentum filters. And I should point out that there's a lot more to the programming than what you see on the chart. The programmers endeavored to make the chart interesting but simple to interpret as well, which is why we usually look for confluence among the signal, namely, green bars, green signal, green filter, and so on. There's actually about a half a dozen things going on behind the scenes in the programming before you even generate a warning dot. The filters are primarily momentum-based filters, so they're trying to capture which way the market momentum is, whether it's more bullish or bearish. Oh, well done, Jim. Jim says he's got 4 trades. He's up 90 ticks so far, or 90 points. Well done. All right, so you see how the bars are getting a little bit wide here again. We'll see how this plays out here in a moment. Now that we've had the breakout, we're looking for the retest, and here comes the retest. We'll take a look here on the Raptor. So this is kind of the area that we're interested in, more or less. Normally when we break a significant swing point or high or something like that, I guess there's the high. Did we break the high? Yeah, a little bit. We normally anticipate 2 moves in the direction of the breakout. So there's move number 1. Now we're looking for the retest. We're going to anticipate to get in on move number 2. And what I'm waiting for is the warning dot and the triangle and hash mark to print. Otherwise, we can expect the market to fall apart and probably retest the lows. We might actually end up with a soft edge sell here of all things. All right, we're getting fairly close to crude inventory, so allow me to pull over a crude oil chart here. And I'm going to show you the OCO function. A lot of times what I like to do around crude inventory report is if the market has a decent range, I'll use the OCO function, which stands for one cancels other. And what we'll do is we'll bracket the range. So we'll place a buy order and a sell order. But ideally, I like to see this happen when prices are drifting in the middle of the range, which they're not doing right now. The reason I place this order so far away is it's a live order. And so I don't want to get it too close to where the market is right now if it's not really ready to rally. What's interesting to me is that very often the DTS system will forecast the direction the market will go before the report comes out. So right now we just produced a buy signal here on the Falcon. And goodness knows there's lots of room for crude oil to move higher. But we'll just kind of keep a lookout on that as we get closer to the inventory report. We'll bring that back over. And now we've got a market that's struggling just a little bit. See, we're producing macro pullback signals here. Not much follow through though. See the width of the bars? That tells me there's a lot of support up here. A big struggle between the buyers and the sellers. We'll see who comes out on top. All right, they're still fighting it back and forth. All right, there's a buy signal. Is that going to have any follow through to it? All right, what I can do is I can take that on a second push. So what I would do is I would look to buy above the high of this bar. So what I've done is I've let the signal engage and I've placed my entry above the high of this bar. So I'm looking for some new momentum, some fresh momentum to bring me into this trade. Otherwise, we're going to be looking at the market perhaps reversing here and giving us a soft edge sell signal, in which case we would anticipate that prices are going to retreat down here, probably to the 40-10 area, maybe even a little bit lower. I'll tell you the truth, I'd be a little bit more open to shorting below here than buying above the high, just because the market's struggling, right? All you got to do is look at what prices have been doing. big rally up, and then sideways. Oops, sorry, sideways. Then the market pushes, market pushes down, and it tries to rally up, and what does it do? It goes sideways, and it tries to rally up again, and this is where we're at. So not exactly a ton of upward momentum at the moment. So I'd be, like I said, I'd be interested in, perhaps a sell down here. You could do an OCO order on this one also. And speaking of OCO orders, let's go back here to crude oil, where we've got about 3 minutes before the inventory report. And I'm not liking the way this is ranging, so I guess I do have to go with the bigger range. Prices are stuck here on the primary support. I really wanted to get in a little bit tighter. The other thing you could do is you can let the market react to the inventory report and then bracket the range. That's what a trading friend of mine does. He'll let the report hit the floor, let the market react to the report, and then bracket his range. Oh, and I totally forgot about the 6E that I put on here. All right, you're going to have to bear with me here a moment. We're going to wait this out, and then I'm going to bring up the 6E for you. I promised you guys the Forex equivalent. I should put the Geiger counter on here also so we can see how the orders unwind. There we go. So what you're going to see when the inventory report comes out is these numbers here are just going to go crazy. The dial is probably going to start flip-flopping back and forth quite violently. All right, so it would be nice if this range were a little tighter and prices were trading right here. I'd bring my orders in, but we'll leave it as it is. Oh, and I need to get a stop in play also. Let's not make it too tight. There we go. So I've got my stop enabled. I've got my entry orders. Lots of buying going on just prior to the report release. So notice how these numbers have spiked a little bit. They went from onesie twosies into the 20s and 30s. All right, the report should hit the floor any moment now. So we actually generated a nice little trendline touch signal right here. Let's see if that has any follow through. So this was another day where the inventory or the Falcon actually caught the signal of the inventory before the inventory release. That's happened like 6 times in a row now. All right, so catching a nice little run here. I'm going to go with a more aggressive stop strategy now, perhaps with the parabolics, lock in some of that profit. And don't forget, you can always let your account be your guide. There's $300 in open profit there. That's a lot of money. And I think we have a trade still going here on the Raptor too. We got filled to the upside. Yes, we did. So we got filled here, and we've hit our first profit objective, and we have our remaining stop currently at break even. So caught a nice little trade on the Raptor too. It's a good thing I wasn't watching because I was a little bit more bearish in my mind on that one. I'm going to go with the parabolics on this one also. Again, I just like the parabolics when the trend is in motion. It gets me out when the trend starts to weaken. Keeps me out of harm's way while the trend is trying to set up. And then as the market becomes more aggressive, or pardon me, loses momentum, becomes less aggressive, it takes me out of the trade. So big spike in buying right here. No doubt that forced the seller's hand, so we saw the buyers overwhelm the sellers. You see how much higher the buying activity is here over the selling activity. And just a nice little move to the upside there. See how far we can ride this out. And you see how the Trailblazer or the Trade Manager, either tool will do this, how it automatically rolls your stops for you. The nice thing about this, of course, is it's hands off, right? This trade was taking care of itself while we were watching the crude oil trade. Okay, so that worked out pretty well. Let's bring over the 6E here. The Euro-US dollar pair would look exactly like this. Here's the 6E, and here was the London Open. We had a nice little green bar sell. This is one of our high probability signals on the Eagle. A nice progression from there. A little bit choppy about an hour before the North American Open. And then we come back with yet another green bar sell shortly after the North American Open, and the 6E has just been in a tailspin ever since. So there's the Euro on the Eagle. Let me bring over the Euro now on the Falcon. Nice little trend change signal. See, trend line changes color. We get the down signal, we get the up, we get the down. Here's the signal. Everything is in sync. Boom. Down she goes. At the very least, it should be enough to find your high probability profit target. Right now, we've bounced off of the primary support. We've already traveled our two zones, and we're actually looking to make a third zone. Wow. When Omar trades the Forex market, he likes to use the support and resistance lines actually as profit targets. So the way he would set this up, knowing that the market's likely to move two zones, is he probably would have shorted here. Here, let's kind of do it like this. He would have shorted here on the signal, probably covered above the high, and then he would be looking for his profit objective down there, somewhere near the support line. So a nice little move. That's another way you can use the support and resistance lines, by the way, is profit targets or places to cover your trade. If you're looking for a place to hide your stops or roll your stops to. As you might suspect, the Hawk also gave us a nice signal. There's a textbook first micro macro cross signal. Great follow through on that. Here was a little scalp to the upside that we didn't get on the other signals. The first micro macro cross higher. Oh, actually, I guess it developed right here. Either one would have worked. Hit your high probability target. Here's the first micro macro cross. Gave you a little bit of heat, but had no trouble falling off. You can see here why we avoid yellow bars or when the market is out of sync. and a lot of choppiness, again, about an hour before the North American Open. And last but not least, let me bring the Raptor over here. Where'd you go? There you are. And here's the Raptor now on the Euro. And nice little hard edge bounce. See how we watch for those hard edge bounces? Comes out with a sell signal, and down she goes. Nice little cloud crossover signal too. The cloud crossover signal actually originated right here a little bit before the hard edge bounce signal. Again, you took a little bit of heat on the trade, but it did work out. The DTS system is normally very good at picking up immediate market momentum, but not always. Sometimes the market will step against you just a little bit. All right, you guys, excuse me just for a moment. I'm going to be right back. Okay, I'm back. Sorry about that. All right, so it looks as though we've made a nice little retracement back here into the hard edge. Did we get a soft edge sell? Yes, we did. We got a soft edge sell on the Raptor right here. Soft edge sell is always, or a soft edge buy, is always preceded by a test of the extreme. So there's our retest, there's our failure, there's our sell signal. That gives us a pretty good indication that the market's probably going to head lower, which it did. And it looks as though it's going to try to keep going lower. Again, first micro macro cross right here in the hawk. We're into the hard edge on the eagle, so we can probably anticipate some sort of reaction there. And we're back toward a support line here on the support and resistance suite. So all these things kind of suggesting we may get some short-term support coming into the market here. Come on, you guys, play nice. The best signal is always the early signal, right? You don't want to be the last guy showing up. All right, working on a little bit of a cloud crossover here on the Raptor now. Should see a little bit of a reaction and another opportunity to sell. Unless they're not going to give us any chance at all to get into this, scoundrels. All right, well, we just got to wait them out. The signal, like I said, developed a little bit earlier. We didn't get one here on the Eagle, which is a little bit odd. The test of the extreme is right here, just a little itty-bitty hiccup. Normally it's more pronounced than that. I wonder if the traders are going to try to get into this morning's gap after all. You know, they tried early on and failed. The market put in a rally after that. This is the first time the sellers have really shown up all morning. Be interesting if they can push it all the way back down to where we started the day, which was around, what was it, 39.80 or so is the low of the day, the low of the morning. Yeah, 39.72. So they've got some room here. All right, so our clouds crossed over. Normally what happens is the market drifts into the cloud a little bit. We end up getting some support out of the cloud, and then perhaps a resumption of the downtrend. All right, so we're getting a little bit of a trend line touch signal here. Oh, here on the Raptor, we've got a sell signal now. Oh, come on back. All right, I'll just take it. What I was looking to do is I was looking to try to catch this one closer to the hash mark, but they wouldn't give it to me. They just kind of slipped away a little bit. I guess I better get a stop and play here. Maybe we'll go with the swing high. Where is that? That's back there. Give myself a couple more ticks. I don't want to get this too close because if this market reacts, I'm going to get it. We're going to see it pull back to the hard edge, right? It's the whole cloud crossover scenario. So my stop, remember, your stop is only a loss if it gets hit. That's why you want to keep your stop back as far as possible, but you, at the same time, you want to control your risk. So I'm going to show you something here with the trade manager. So if we, okay, so here's our signal. If we look at taking this signal, what most traders do is they try to cover the trade really, really tight. And that's all well and good, but it gives you no staying power. If the market even moves against you a little bit, you're stopped out, right? Now notice the risk amount. The risk amount is $300. Now don't freak out. This is what is appropriate for my account. It may or may not be what's appropriate for your account. But what happens, let's say if I put my stop up here. Oh, the risk amount is still $300. But you see, I've given myself a little bit more staying power. What happens if I place my stop, say, oh, I don't know, above here? Oh, trade manager says, sorry, Eric, you can't afford that. So what if I place it right here? Oh, it's still about $300. But what are the odds? Now we're talking probabilities. What are the probabilities that this trade will work out versus the trade where I have my stop really, really tight? Well, obviously the probability that this trade with the really wide stop, it has a very good chance of working out because I've given the market a whole lot of room to move here, right? I can survive a little bit of a pullback or even a larger pullback. And you know, the funny thing is that even though my stop starts up here, the market is going to give me a chance to adjust my stop. You see here? So now I can bring my stop in and I can start rolling my stop even or just hold my stop here. And I've got approximately half the money at risk. So I'm looking at maybe $150, $160 at risk if the market reverses now and stops me out. But rather than try to second guess where the market might retreat to when I first set up the trade, because really that's all I can do is guess, right? The trade's here. How far is it going to pull back? Is it going to pull back to here? Is it going to pull back to here? Is it going to pull back to here? I don't know. I know if it pulls back, it's probably going to pull back at least to the macro line, but the whole point of the stop is it's my safety net, right? So why not give myself a decent safety net? Okay, so the market's pulling back. It's shown me where the sellers are. So now I can roll my stop in. If the sellers lose control at this point, well, I may as well take my loss because they're going to lose it up here as well. And you see now as the sellers are moving the trade down, I can start to roll my stop along with them. Maybe go with the bar high low, which is a little bit more aggressive. And if the sellers lose control now and stop me out, well, what will I have lost? Maybe $100? See, again, I can roll it down. I can keep rolling it. I can keep rolling it. But the important thing is I'm giving this trade an actual chance to work out. Okay, so let's say I got stopped right here. That looks like what, maybe a $50 or $70 loss? That's not the end of the world, but I've given the trade a chance. That's the important part. Okay, I should have actually been rolling my stop down here on the Raptor because if this market reverses, it's going to head higher because we're going to have a soft edge buy. I was holding my breath there. It helps. If the trade's not going your way, just hold your breath. Okay, so you see this candle here with this tall wick to it? That would be all right to start rolling my stop in a little bit. So maybe I'm going to go with the bar high-low, make it a little bit more aggressive, roll my stop in. And again, the idea is if the trade fails at this point, then it's probably going to head higher anyhow. So I might as well start rolling my stops in more aggressively. Looking for the sellers now to step in and take control. Or if the buyers are going to take control, then you might as well take me out. All right, so there we go. So I got stopped out of that trade. We'll see now whether that was a good call or not. See, there they go. They're going to try to run the highs now. They may well just end up going in a little bit of a sideways motion. It's getting near the lunch hour. Yeah, I see we're starting to get a lot of yellow bars here on the hawk. Starting to get the market drift sideways again. See the filter and the trend line here on the Falcon really starting to break up, starting to look like a roller coaster. That's usually an indication that we might be heading into a bit of a sideways range. Oh, is that the deal? Yellen is making an announcement today at 2 p.m. So yes, that's going to put the nix on the trend here, I believe. All right, you guys, I'm going to close up the room here in a few minutes unless anybody has any questions. Please type away. Otherwise, we're going to call it a day. Yeah, like Jim says, you need 30-point stops today. That's no joke for some of the swings that we've been seeing. No questions? All right. Well, thank you very much for your attendance today. I hope that it was at least a little bit educational for you. DTS owners, I'm going to see you in the trading room again tomorrow morning, and hopefully the market will have a little bit more follow through than what we've been looking at today. All right, you guys, we will talk to you later. Bye for now.